Closing bell market zone. It is not just Apple reporting results after the bell. We've got full team coverage of all the key names to watch. Mackenzie Sagalos is on Amazon. Tanea McKeel watching Coinbase. And Julia Borston is all over Reddit. Mac, let's get it started with Amazon.
Hey there, Mike. There's a lot of pressure on Amazon heading into this print after Microsoft's blowout cloud quarter. Azure revenue grew 39% in Q1, putting the spotlight on whether AWS, Amazon's earnings powerhouse that delivered over 60% of operating income last quarter, with margins triple the company average, can match that momentum. Growth has missed targets for 3 straight quarters, so analysts want to see re-acceleration. And then there's the hyperscaler spending war. Amazon is on track to invest $100 billion this year, and I'll be listening for any update, especially after Microsoft lifted its spend to $120 billion and Alphabet boosted its own CapEx commitment to $85 billion. We'll also get a read on third-party sellers and online sales, showing whether tariffs are hurting demand or if U.S. market share is actually growing as rivals Shein and Temu struggle with higher import costs after that de minimis rollback. Mike?
Yeah, and Mac, when it comes to the e-commerce side of Amazon, what is the company, what's sort of the latest stance they've had in terms of their expected tariff impact when you wash it all through?
Well, in Q1, they guided more modestly over exactly that. I mean, the tariff wars kicked off April 2nd. So basically for the duration of the second quarter, it's coincided with this new state of play for trade. But what I will say is I'm looking through a lot of these analyst notes and they're optimistic. And that's why you're seeing more bullish sentiment in terms of estimates in those 2 key categories, the third-party sellers and online sales, Mike.
Yeah, obviously the street is pretty confident at their scale. They're being able to navigate this stuff. Mac, thank you very much. Tanea, Coinbase backed off a little bit, but what are we expecting?
Yeah, Mike, analysts anticipating a weak quarter of trading following that exuberance that we saw in Q1 as traders were, of course, still celebrating the new pro-crypto Trump administration and all of the policies that would be to come. Come April, however, as Washington's focus shifted to tariffs, we saw speculative trading by retail slowed across centralized exchanges, including Coinbase, and it was inflows into crypto ETFs and buying by crypto treasury companies, so the institutional side that was really supporting crypto prices during this period. So I'll be looking at retail trading volumes, the street expecting a roughly 30% drop from the same quarter last year. Also, of course, going to be looking at stablecoins, which ended up being a big theme and driver of the crypto market action in Q2. Analysts expecting to see a 38% increase in revenue from stables year over year. So, there is some optimism heading into the print. We have now, of course, an official crypto law, a new Bitcoin all-time high. Trading volume has increased since mid-July in the SEC today. Saying they want to bring all financial markets in the U.S. on chain. So I'll be on the call later tonight, listening to Alicia Haas, their CFO, in the 4 o'clock, see what they have to say about recovery heading into Q3. Mike?
Yeah, and today I was interested in hearing Robinhood and CEO Vlad Tenev this morning talk about how non-crypto trading revenue for its platform has actually been stronger. I mean, it would match up with, I guess, what the expectations are for Coinbase here. Are we just having a hangover effect from all the buildup of good crypto positive news leading into this period?
Yeah, I think that's partly it. You're also seeing, we have never had all of these different ways to express a view on crypto. I think Coinbase being part of the S&P 500 now, which happened, I think, at the end of May, kind of forces traders to have a position on crypto when previously they maybe didn't need to. We have all of these crypto equities now. The ETFs are becoming more popular. So, yes, definitely interesting to see the announcement from the SEC today. We're going to be looking for product updates from Coinbase tonight to see if there is anything in the works that could put them more in line with Robinhood, which made a splash with its announcement about tokenized stocks, as well as other crypto exchange competitors, Mike.
All right, thank you. We will see what they have to say. Julia, what are we looking for with Reddit today?
Well, Reddit shares have gained 42% just in the past 2 months, and analysts are largely bullish going into earnings. 62% have a buy rating on the stock, 34% have a hold, and analysts expect Reddit's revenue to grow nearly 52% and earnings to swing to a 19-cent per share gain from a 6-cent per share loss in the year-ago quarter. Now, B of A calls Reddit a battleground stock for investors because while revenue trends continue to sound positive, The company's user numbers did disappoint in its earnings last quarter. Citizens writes, quote, Reddit continues to improve its advertising product. We believe advertising can continue to surprise investors to the upside. While Roth Capital Partners says that they are concerned about dependence on Google traffic and the growing negative impact from AI search. Back over to you.
Yeah, that has been a tricky area, right, for everybody figuring out exactly whether they've just perfected the search engine optimization for Google and maybe it's not as important anymore. I wonder, Julia, if analysts still talk about the opportunity for, AI training on Reddit's vast pool of comments over the years. I mean, I saw the deal Amazon struck with the New York Times company yesterday, but $20 million a year didn't even strike me as a huge number.
Yeah, I mean, I think what's really interesting here is on one hand, Reddit is partnering. They have collaborated with Google and others, but they are reliant on that search traffic. And they also have this lawsuit with Anthropic to make sure that their data isn't inappropriately used to train some of these engines.
But it's not at this point a specific source of revenue from the Anthropic training?
Well, no, I mean, Anthropic is a lawsuit, but we'll see what they say. And I think one of the key questions here is around the traffic and what kind of traffic does not come from these search engines, as instead of search and links to Reddit, they now start summarizing those results.